Yes. To see this, problem number 9. The balance sheet of holding company. Yes, till now we have discussed 8 problem. Now let us see the problem number 9. The balance sheet of holding company and subsidiary company, that is H and S Limited, as on 31st 3 2015 are as follows. So now you see here liability side there are two types of capital is given. One is preference share capital, then there is equity share capital. For preference share capital, if you see for subsidiary limited it is nil, but for holding company it is 1 lakh. Equity share capital both the limited it is given. So then after that there is a general reserve, and in our syllabus preference share capital related problem is not there. That is, if there is a preference share capital of subsidiary limited, then there may be some calculations. So that is not included in our syllabus. So if you see equity share capital, after that general reserve information is given, then profit and loss account information is also mentioned. Similarly, there is bills payable, holding company is not there, only subsidiary company information, bills payable, that is a dues from the subsidiary company to other company, that is 24,150 is given. After this, if you see, there is creditor in the liability side for both the company. Now asset side information, if you see, there is land, plant and machinery and furniture. Land, plant and machinery and furniture is mentioned in the asset side. Investment in 1200 equity shares purchased from S Limited. So here holding company purchases 1200 shares in subsidiary company. So total number of shares we want. So that is equity share capital of subsidiary company, if you see, that is 1,50,000. 1,50,000 and paid up value is 100. So 1,50,000 divided by 100 if you do, what is the amount? So that we have to see amount is 1,500. Out of that 1,500, 1,200 is taken by holding company. That means what? 1,200 is majority. Remaining 300, that is 1,500 minus 1,200 is minority. So 300 is minority, 1,200 is majority. We know. After this, stock and debtor information is given in the balance sheet. Yes, after following the balance sheet, there is 4 adjustment. See this. 4 adjustment is mentioned that we have to see. So first one, P&L account of holding company includes an interim dividend of 10% received from subsidiary company, that is S Limited. So what we have to do is, first thing, what is the capital held by the holding company in a subsidiary company, that we have to determine. Next thing we have to see what is the paid up value. Why? Because dividend is calculated on the paid up capital. So paid up capital we want, that also we have to calculate. Yes. Then interim dividend of subsidiary company also we have to see, because since in this question there is a bonus issue also. Bonus issue calculation is there. So bonus issues are paid out of profit, means if dividend is also there, that is also paid out of profit, isn't it? So that is why dividend also we have to calculate for both companies. Then see second point, on 1/4/2014 the P&L of S Limited, that is subsidiary company, stood at 77,500. So this 77,500 is nothing but pre-acquisition profit of subsidiary company, because acquisition date is 1/4/2014. So on that date this balance was there, it seems. That is why this is pre-acquisition profit. Similarly, general reserve balance of rupees 300 was also there on that date. So general reserve, this 3,000 is a pre-acquisition reserve. So we have to see the balance sheet for that matter. See this balance sheet, if you see, liability side general reserve, subsidiary company total reserve, that is Total reserve of subsidiary company is 6 lakh, 6,000. Sorry, 6,000. Out of 6,000, 3,000 is pre means remaining, of course, remaining 3,000 is post acquisition reserve. Similarly, there is a profit and loss account of subsidiary company. If you see, that is 1,08,000. That's total P&L of subsidiary. Out of that, 77,500 is pre means remaining is post. But in this problem, there are certain adjustment that we have to discuss. Then what happens here, acquisition is made at the beginning of the year, so there is a no need of calculation of pre-acquisition, this one current year profit or loss. No need of calculating current year profit or loss. Yes. Then H Limited revalued plant and machinery of S Limited at the time of purchase of share at 1,11,300. So if you see now plant and machinery of S Limited given in the question we want. What is that? 91,300. So this is the original balance. After this revaluation of assets and liabilities taken place. So after the revaluation of assets and liability, now the balance is 1,11,300. Of course, there is an increase in the balance of plant and machinery. So that is appreciation in the plant and machinery. So or else you can say it is a revaluation profit. Whenever it is a revaluation profit, we will treat that as capital profit. Capital profit is equal to capital reserve, and this revaluation profit we have to distribute between minority shareholders and majority shareholder depending upon their fraction of a share. So that we have to calculate later. So now we discussed the first two adjustment. Then you see the third adjustment is the stock of holding company. H Limited means holding company includes 8,000 of stock purchased from S Limited. So this is nothing but intercompany transaction. Here S Limited supplies the goods to the H Limited and that goods was there at the end of the financial year. So 8,000 is nothing but unsold stock. So this unsold stock is there in the problem. That means what? There is unrealized profit also. Whenever there is an unsold stock, there is an unrealized profit also. Now next you see the further the debtor of S Limited. That is subsidiary company debtor include 24,000 for sales to H Limited on which S made, that is subsidiary company is made a profit of 6,000. So here percentage is not given. 25% cost, 20% sale, that is not given. But one information is given here. See this, for 20,000, 24,000 rupees, 6,000 is a profit. For 24,000 rupees, 6,000 is a profit. For 8,000, how much? That we have to calculate. If we calculate that, we'll get unrealized profit. So that is cross multiplication we have to do. Then there is one more adjustment, that is S Limited made a bonus issue during the year out of pre-acquisition profit. So whenever there is a bonus issue is made out of pre-acquisition profit, first thing we have to show bonus issue separately. That is very important. Bonus issue we have to show separately, and we have to deduct from pre-acquisition profit that bonus issue also. That is one more thing. So 60,000 was not recorded in the books. So from pre-acquisition profit, we have to deduct this 60,000. Prepare consolidated balance sheet. Yes. So this type of problem you can expect for 24 marks. So again, I am telling you, so don't expect simple problems for examination. Like this, all the adjustment they will ask. So now we have seen liabilities, assets and adjustment. Now one by one we have to discuss. Before discussing, there is some notes that we have to see. So see this, issue of bonus shares out of pre-acquisition profit. How we know? That is given in the adjustment. It should be deducted from Post acquisition profit here I have written, but there is one change here. It is not post, it is pre. It is pre. There is a correction. It is pre acquisition profit. You have to correct that in notes. There's a typing mistake. Issue of bonus share out of pre-acquisition profit, it should be deducted from pre-acquisition profit of S Limited. So that is clear. Now, the minority shareholder share of the same should be added to the minority shareholder. Minority shareholder means what? It is outsider's share or third party share. There what you have to do is you have to show bonus share calculation separately. So for minority shareholder, what happens? Usually there are three things. That is capital of subsidiary, total reserve of subsidiary, and total profit of subsidiary. But in this question, if you see, there is one more separate heading you have to show. That is bonus issue that you have to show. Then there is a revaluation profit that also comes. So that adjustment you have to make. Yes, that is one more note. And what about holding company? Holding company share should be treated as capital reserve. Yes, so that is as usual because bonus issue is out of pre-acquisition profit means pre-acquisition profit is capital profit. Like whatever we have done till previous problem, we have discussed whatever pre is long term in nature. That is why it is pre-acquisition. That is capital profit. Whenever it is capital profit, it is treated as capital reserve. So here bonus issue also is treated as a capital reserve. Now that is very important. But similarly, one more note is given, that is if in the problem bonus shares are issued out of post acquisition profit. But if you see the problem, it is out of pre acquisition profit. But what if sometimes they may ask bonus shares out of post acquisition profit? In that case, what you have to do? It should be deducted from post acquisition profit or reserves of the subsidiary company first. Then similar calculation. Minority shares you have to show separately, and in holding company shares, here what happens? You have to show that as a revenue profit. Why? Because post acquisition means it is a short term in nature. That is why we have to consider this as a revenue profit. This answer you will show in the consolidated balance sheet. That is a liability side under profit and loss account S Limited column. You have to show this information. Yes, so these are the things regarding the question. After discussing all these things, we have to solve the problem one by one. That is working note is necessary. So now first working note as per the problem is interim dividend. Why? Because in the question adjustment interim dividend they have said. So what we have to do is first we have to find out capital we have to find out. See this interim dividend of H from S. That means holding company is getting the dividend from subsidiary company. Now we want the holding company's capital in subsidiary company. How to find out that? Once again we will go to the question. Once again we'll see the question. There they have given holding company invested 1200 shares. So now we know 1200 shares are there of the holding company in subsidiary company. Now just to this amount multiply with paid up value. What is the face value of the share? That is given under equity share capital column. That is 100. So 1200 into 100. You will get the paid up capital. So what is 1200 into 100 amount? That is 1,20,000. Yes, interim dividend percentage is given in the adjustment. That is 10%. So 1,20,000 into 10%, you will get 12,000. So this is a dividend holding company gets from subsidiary company. Again, this interim dividend means it is not annual dividend. This dividend company is getting somewhere in between the year. Interim means usually in between half of the year or somewhere in between the year. So again, in holding company profit and loss account, we have to divide that profit and loss account into two parts. That is, one is capital profit we have to see. Then next thing we have to see is a revenue profit. So now see this interim dividend 12,000 is capital in nature. So this 12,000 goes for capital profit. Whatever remaining is there, that is a revenue profit of a holding company. So this is very important. So now after this first working note, similarly we have to find interim dividend of yes limited. So this is an assumption in the problem, that is because of bonus issue. Bonus issue is there means there, we'll assume that there is interim dividend also. Yes. So now interim dividend of yes limited, how to calculate? See this. Now yes limited capital we want, especially equity share capital we want. So yes limited equity share capital given is 1,50,000. Equity share capital, shares of 100 each, 1,50,000. So on 1,50,000 take 10%. 1,50,000 into 10%. What is the amount? That is 15,000. So interim dividend of yes is 15,000. So you can say out of this 15,000, 12,000 goes to holding company. In short, like that also you can understand this one. Yes. So after this, there is a profit and loss account of holding company. I told, right, you have to divide between two. Why? Because there is a capital profit and revenue profit, and whenever there is a capital profit you have to show that as capital reserve. So now let us see the balance sheet once again, because here we want profit and loss account of holding company, not subsidiary. We are talking about holding company. So holding company P and L, if you see 3,60,000, 3,60,000 out of that interim dividend to the holding company 12,000, that is capital profit. So you have to show separately as capital reserve, that we have taken separately 12,000. So what is the revenue profit? Revenue profit is remaining, that is 3,60,000 minus 12,000. So 3,48,000 is the revenue profit. So this revenue profit you have to show in the consolidated balance sheet. Very, very important. And what about this capital reserve? Capital reserve goes for capital reserve calculation. There is working note is there. In the problem, there is capital reserve working note is there. There we have to add this one in this information. Interim dividend information we have to add. That is set off of capital reserve against goodwill. There is one working note. Yes. So this is point number 3. These 3 points are addition to in this problem if you compare with the previous problems. So 3 extra point is there working note. Now let us see the fourth working note. This is as usual normal. See this calculation of pre-acquisition and post-acquisition reserve. If you see the adjustment, if you see the adjustment here, they have said that there was a reserve of 3,000 on 1/4 2014, that is on the acquisition date. So we can easily determine that 3,000 is pre-acquisition reserve. Total reserve we know that is given in the balance sheet subsidiary company 6,000. So post acquisition reserve is 6,000 minus 3,000, that is 6,000 minus pre-acquisition reserve. So you will get post acquisition reserve as 3,000. Yes. So both answer is same, 3,000 and 3,000. That is working note number 4. So yes, any doubt till here? Tell me now. This is very, very complicated problem. You can expect this type of problem for examination. Yes, tell me. Yes. Have you understood now? Yes. Ashish is saying yes. What about others? I hope everyone understood this one. Yes. So now see this working note number 4 we have discussed. Then there is calculation of pre-acquisition and post-acquisition profit, that is working note number 5. So now pre-acquisition profit, again this pre-acquisition profit, if you see the adjustment, then it is given 77,500, but we know out of this 77,500 there was a bonus issue that is given in Point number 4, adjustment. See this. Yes, made a bonus issue during the year out of pre-acquisition profit. So out of this 77,500, 60,000 goes. So you have to deduct this 60,000 from 77,500. So what is remaining now? That we have to see. So what is the remaining amount? See this now. Remaining amount 77,500 minus 60,000 is 17,500. But I have already told there is an interim dividend calculation. Since there is a bonus issue, we will assume that there is interim dividend also, and interim dividend is paid after the acquisition. Interim dividend is paid after the acquisition. Why after the acquisition? Because you know it is somewhere in between the year. I have already told it is somewhere in between the year. Acquisition was at the beginning of the year. So acquisition profit beginning of the year balance we are taking, and what happens after that? That balance we are sharing among the shareholder after acquisition. So from one part you have to deduct that amount interim dividend, and to the another part you have to add the amount. So both the thing you have to do. See this now, I will tell you. Now, first from pre-acquisition profit, 15,000 interim dividend we have to deduct. Why? Because this is taken from profit. Like bonus issue, we are taking 15,000 from profit. Which 15,000 we are talking about? Working note number 2. Interim dividend of Yes Limited. That is total interim dividend of Yes Limited, 15,000. Yes. So that is why it is deducted from pre-acquisition profit. So now final pre-acquisition profit balance, that is 77,000 minus 60,000, you will get 17,500. 17,500 minus 15,000, you will get 2,500. So final pre-acquisition profit after all the settlement is only 2,500. Now this is clear. Now what happens? There is post-acquisition profit also. Now, post acquisition profit, you know, total profit we want. Total profit we want. Total profit of what? Total profit of subsidiary company. So, once again, we will see the question now. We have to see the question. Total profit of subsidiary, where it is given. See this. Profit and loss account of subsidiary company 1,08,000 is given, isn't it? So this is a total profit of subsidiary. Out of that pre-profit we know that is given in the adjustment 77,500. So minus this information. Why minusing this information? Because remaining is a post. That is confirmed. Remaining is a post. So what is the difference amount? Can you tell the difference now? 1,08,000 minus 77,500. What is the difference? Can you tell me? What is the difference amount? We'll calculate this one. 1,08,000 minus 77,500. Yes, 30,500. See this. 30,500 is the difference amount. That means post acquisition profit we know 30,500. But I have already told there is a interim dividend. Since we have deducted from pre-acquisition profit, now we have to add to the post-acquisition profit to cancel the transaction. Yes, see this. It is assumed that after the acquisition, interim dividend is paid. So this 15,000 is added back. So 45,500 is a post-acquisition profit now. 30,500 plus 15,000. Total is 45,500. This is working note number 5. Calculation of pre-acquisition and post-acquisition profit. Yes. So I hope this is clear. Any doubt regarding this one? Yes, you can ask me now. Just tell me, have you understood? Ashish is saying yes. What about others? What others are doing? I hope you all understood. Rajat, Anusha, Kushal, yes. Akamsha, Amrita, Ashish, yes. See, After discussing this 5 working note, next thing we have to calculate is majority minority ratio. So majority minority ratio, first thing we want is subsidiary company share capital. Subsidiary company share capital is given in the balance sheet, that is 1,50,000. 1,50,000 divided by 100, that is a face value 100 per share. If you do, you will get the number of shares available in subsidiary company. So that is nothing but 1,50,000 divided by 100. What is the amount? 1,50,000 divided by 100 is somewhere around 1,500. Yes, 1,500 is shares available in subsidiary company. Out of that, investment made by the holding company given in the asset side is 1,200. So holding company means majority, you know that, because it is more than 50%. Remaining is minority, that is 1,500 minus 1,200. Minority is 300. So we want majority minority ratio. Simplify this. 1,200 majority to 300 minority. Simplification, 0 0 cancels, 3 ones are 3 fours. So 4 is to 1. 4 is to 1 is our ratio. So there are total 5 units, 4 plus 1 unit, 5 units. So fraction here, majority fraction is 4 by 5 and minority fraction is 1 by 5. So now this is clear. Working note number 6. After this, we have to do is calculation of minority interest. Seventh one, calculation of minority interest. So for minority interest, I have already told at the beginning, capital, reserve, profit, three things common. In addition to that, bonus issue separately you have to show, and revaluation profit separately you have to show. So now one by one we have to discuss under minority interest. First one, 1 by 5 share in share capital, because we know the fraction here 1 by 5. So 1 by 5 share in share capital. Share capital of what? Share capital of subsidiary. For all the working note purpose, we consider only subsidiary company information. So 1,50,000 into 1 by 5, if you do, you will get 30,000. This is outsider share in the share capital of subsidiary company. Next, bonus share we know that is given in the adjustment 60,000, not recorded in the book, and it is taken from pre-acquisition profit 60,000. So 60,000 also 1 by 5 we have to take for share in bonus issue, that is 12,000. See this, that is shown separately. Next, third one is reserve. Reserve, total reserve is given in the balance sheet is 6,000 of subsidiary company. 1 by 5 you have to take. So 1,200 is share in total reserve. Similarly, there is a total profit, but in total profit again, you have to deduct bonus issue. Why? Because total profit means 1,08,000 we know that is given in the balance sheet, and we know that out of pre-acquisition profit, bonus issues are made. So out of 1,08,000, somewhere that 60,000 is included in 1,08,000. It is very clear. So what happens? We have shown bonus share calculation separately. That is why we have to deduct this 60,000. Why? Because here we have shown, right? That is why we have to deduct this 60,000 from total profit. 1,08,000 minus 60,000. So remaining amount of total profit is now 48,000 after deduction of bonus. So 48,000 into 1 by 5. What is the amount? That is 9,600. Working note, 7th point, 4th answer. Now next one. Under that one more is there, revaluation profit. 1 by 5 share in revaluation profit. Again, revaluation profit is capital in nature. Capital profit. That is nothing but capital reserve as per accounting standard 21 consolidated financial statement. So revaluation profit given in the balance sheet, plant and machinery 91,300. After revaluation, change in the balance is 1,11,300. Of course, there is appreciation in balance, appreciated by 20,000. So that 20,000 is a revaluation profit. On that you have to take 1 by 5. So 20,000 into 1 by 5, 4,000 becomes the share in revaluation profit. But we want total minority interest. So add all these 5 information. Share capital, bonus issue, total reserve, total profit, revaluation profit. Finally, total minority interest after adding all these things is 56,800. So this 56,800 you have to show in the liability side of the consolidated balance sheet separately. Yes. So this is about working note 7. Now, after calculating minority interest, next thing we have to do is majority interest. Calculation of majority interest. So, for majority interest calculation, we have already discussed about this. We want separate information like pre-reserve, we want pre-profit, we want post-reserve, we want post-profit, we want for the purpose of majority interest. Why? Because we are going to divide whether it is capital reserve, whether it is capital profit, whether it is revenue reserve, or whether it is revenue profit. And whatever revenue in nature, we have to show in the consolidated balance sheet. Whatever capital in nature, we have to consider for capital reserve working note calculation. That is why here now calculation of majority interest. First one, 4 by 4 share in 4 by 5, because 4 is to 1, right? Ratio is 4 is to 1. So 4 by 5 share in share capital. Yes. So now share capital is common. Subsidiary company share capital 1 lakh 50 into 4 by 5. So answer is 1 lakh 20,000. So this 1 lakh 20,000 is nothing but paid up value of the share. So this is the information we have calculated in the first working note for interim dividend calculation. So you can compare with that. So it tallies. You see here 1,20,000 is a paid up capital. This you have to set off against investment. What is the investment amount? Investment amount we have to see the balance sheet. See this. Now we will see the balance sheet once again. Investment amount we have to discuss. So if you see the asset side, investment amount of holding company in subsidiary company, that is 1,80,000. So investment is 1,80,000 and paid up value is 1,20,000. Means what? Here holding company is paying more. Holding company is paying more amount to the subsidiary company. So whether it is a profit to the holding company? No, it is a loss to the holding company. Whenever it is a loss to the holding company, as per the accounting standard 21, what happens? We have to consider this as a capital loss. So capital loss, under accounting standard 21, capital loss is equal to goodwill. So in this problem, there is a goodwill. How much is the goodwill amount? That is 1,80,000 minus 1,20,000. That is 60,000 is a goodwill amount. That we will discuss in the later working note. Yes. So that is first one. Second one, 4 by 5 share in bonus issue. Bonus issue we have shown separately under minority. Similarly, we have to show separately for majority. So 4 by 5 share in bonus issue, 60,000 into 4 by 5, 48,000. Again, bonus issue is capital in nature, that is capital reserve. In front of that, you have to write capital reserve. Next, 4 by 5 share in pre-acquisition reserve. Pre-acquisition reserve, if you see, that is 3,000. Why 3,000? 3,000 was there at the beginning of the acquisition. At the time of acquisition, 3,000 was there. Total reserve is 6,000. So we want pre-acquisition. So only 3,000 we have to take. 3,000 into 4 by 5, 2,400 is pre-acquisition reserve answer. This is capital reserve. Again, pre means long term in nature. That is point number 3. Next we want is post-acquisition reserve. In this problem, both are similar. 3,000 and 3,000 both is similar. That is why what happens? 3,000 into 4 by 5 again 2,400, it becomes post-acquisition reserve, revenue reserve. Why? Because total reserve is 6,000 given in the balance sheet. So out of 6,000, 3 pre means remaining 3 post. Very clear. That is point number 4. After this, if you see, there is pre-acquisition profit. Pre-acquisition profit, very, we should be careful. We should not see the adjustment. In the adjustment, they have said 77,500. But we know that is not the answer. Why? Because we have done working note calculation. In that, we got the pre-acquisition profit answer. What is the answer? We got 2,500. If you see the pre-acquisition profit answer, 2,500. So that answer you have to take. So 2,500 into 4 by 5. So what is the answer? Here for the fifth one, 2,000. 2,000 is pre-acquisition profit share to the holding company. Again, pre means capital reserve. That is point number 5 under working note number 8. Next, there is 4 by 5 share in post acquisition profit. So post acquisition profit again very important. Balance sheet total profit 1,08,000. Out of that 77,500 is pre-acquisition profit, means 30,500 is post-acquisition profit. But we have taken 45,500. Why? Can you tell me now? Why we have taken 45,500? Can you tell me? Yes. Can you tell me now? Why we have taken 45,500? What is the reason? We have discussed this. Instead of 30,500, 45,500 means what is the difference amount? There is 15,000. 15,000 from where that 15,000 difference came? That is about interim dividend. Interim dividend we have deducted from pre-acquisition profit and added to the post-acquisition profit. So now post-acquisition profit total, if you see the previous working note, you will come to 45,500. So 45,500 into 4 by 5, if you do 36,400 is the answer. Again, this is post. Post means short term in nature. So revenue profit you have to write in front of that. Now seventh one. Seventh point under eighth working note, revaluation profit is also there. So revaluation profit, plant and machinery 20,000 increasing. So 20,000 into 4 by 5, 16,000. So this is 16,000. What we have to do? This is revaluation profit is equal to capital profit. So capital profit is equal to capital reserve. So in front of that you have to write capital reserve. That is point number 7. So under majority there are 7 points. Very very important. Under minority there are 5 points in this particular problem. Yes. So after this working note, next working note is calculation of cost of control. Working note number 9. So cost of investment that is given in the asset side, we have already discussed 1,80,000. Yes, paid up value of the share. You want to see majority interest work point number 1. Majority interest point number 1. If you see 1,20,000 is a paid up value. This information you have to deduct from investment. So this information we have deducted. So we know that cost of control or goodwill is 60,000 because it is a loss to the holding company. Holding company is paying more. After knowing the goodwill, we want to set off this goodwill against capital reserve because we know we cannot show both in consolidated balance sheet. So what we have to do? We have to set off and show only one information. Either we have to show goodwill or we have to show capital reserve. So total capital reserve we want. So now total capital reserve, from all the things we have to add now, very very important. First thing is 12,000. From where this 12,000 came? Interim dividend. See this. Interim dividend working note number 1, 12,000 capital profit. So that capital profit is equal to capital reserve. So 12,000 you have to add here. 12,000 plus 48,000. Where this 48,000 came? 48,000 is a bonus issue. Bonus issue, that too where? Bonus issue under majority interest working note. Very very important. Bonus issue under majority interest working note, there we have written capital reserve. This information you have to take 48,000. Similarly, pre-acquisition reserve, capital reserve, this also you have to take 2,400 under majority interest working note. Similarly, pre-acquisition profit is also there, 2,000, that is capital reserve, that also you have to take. Then there is a revaluation profit, again you have written capital reserve, that information also you have to take. So all the information you have to add, then you will get total profit, total capital reserve as 80,400. That is why it is necessary while computing majority interest working note to write in front of the answer what amount goes where. Otherwise, it is very difficult to solve the problem. That is why in front of every answer you have to write whether it is capital reserve or whether it is revenue reserve or whether it is capital profit or whether it is a revenue profit. Yes. So now we know total capital reserve 80,400, that is interim dividend plus bonus issue plus pre-reserve of majority plus pre-profit of majority plus revenue profit of majority. Yes, revenue profit I told. So why this is a revenue profit? Revenue profit means here revaluation profit. So here you can again change this one. If this is not a revenue profit, this is revaluation profit. Correction, typing mistake again. Revaluation profit. You have to write revaluation instead of revenue. Yes, correct. So now total capital reserve is 80,400. From that, let's total goodwill. Total goodwill we have just now calculated in the previous working note 60,000. So that you have to deduct. Now you know that total capital reserve negative balance is more than the positive balance. So negative balance means the liability side is more than the asset side. That is why net capital reserve answer is 20,400. This information you have to show separately in the consolidated balance sheet. So this is about working note number 10. Yes, though this sum is not ending at all because it is very lengthy problem. So you, unless you are sure, please do not attempt the problem because it is very difficult. That is why. So you have to be 100% sure when you are trying to attempt the problem. Yes. So now working note number 11, intercompany dealing. That is elimination of intercompany dealing. So now we have to see the adjustment. Working note number 11, we have to see the adjustment here. Where that adjustment is there? Yes, see this. Intercompany dealing. Where it is given, stock of H Limited included 8,000 of the stock purchased from S Limited. This is nothing but 8,000 is unsold stock. So don't take this amount as intercompany. So out of these three amount, what is our intercompany amount? Intercompany amount is 24,000. This is very important. See this. Further, debtor of S Limited included 24,000 for sales to H Limited. So this 24,000 affects both the side. Debit side also, that is the debtor also, credit side also, that is creditor also it affects. So from both the side you have to deduct 24,000. So first thing we want to do here, we want a total creditor and total debtor. So creditor of H Limited given in the balance sheet is 1 lakh. Creditor of S Limited given in the balance sheet is 44,150. Total creditor. What is the total creditor? Add both. 1,44,150. So similarly, debtor also we want to do. That is debtor of H Limited given in the balance sheet 2,12,000. Debtor of S Limited given in the balance sheet is 80,400. Total debtor we want. Total debtor is 2,92,400. So now from the both the side, asset side as well as from the liability side, you have to deduct this intercompany 24,000. So minus intercompany 24,000 from total creditor minus intercompany 24,000 from total debtor. So now final answer of total creditor is 1,20,150. This answer you have to show in the consolidated balance sheet. Similarly, total debtor answer after intercompany 2,68,400. Again, this answer you have to show under debtor and the consolidated balance sheet. This is working note number 11. After this working note number 12, that is treatment of unrealized profit. So again, in the same adjustment, if you see for 24,000, 6,000 is a profit, they have said in the adjustment in the question. So for 24,000, 6,000 is a profit. For 8,000, how much? Why 8,000? Because 8,000 we know this is unsold goods, which is there with the holding company. Unsold goods are there with the holding company at the end of financial year 8,000. So on this unsold goods, we want unrealized profit and percentage information is not given. That is why we have to use the other information available. That is in the same adjustment they said for 24 6,000 profit 8,000 how much cross multiplication we have to do. So now cross multiplication 8,000 into 6,000 divided by 24,000. So now final unrealized profit after cross multiplication is 2,000. Yes, now we got unrealized profit answer. So this unrealized profit, what we have to do? We have to deduct from profit and loss account. We have to deduct this unrealized profit, and from stock also we have to deduct unrealized profit in the balance sheet. So there is a two-way deduction. One is asset side deduction is there in the consolidated balance sheet, and the liability side deduction is there in the consolidated balance sheet. So this is about working note number 12. Yes. So finally we are done with all the working note. 1 to 12 working note we have done. So after this we can easily do consolidated balance sheet. So now consolidated balance sheet means we know that is a combined balance sheet of holding company and subsidiary company. So now land, plant and machinery. Now first thing we have to see is the land information. So now once again we have to see the question, because there they have mentioned what is the land for holding, what is the land for subsidiary company they have given. See this, land holding 3 lakh 56, land for subsidiary 70, plant and machinery for holding 1 lakh 40, for subsidiary 91 300, but there is adjustment now. Now this 91 300 increased to 1 lakh 11,300. So you have to take revaluation amount or agreed amount. So instead of 91 200, 91 300, you have to take 1 lakh 11,300. That is given in the adjustment. Furniture, add both, no adjustment. Investment in shares, that is cancelled because it is set off. Then stock, you have to add both and deduct unrealized profit. Debtor, you have to add both, and there is intercompany transaction, you have to deduct. So now we will see that consolidated, yes, where that went, consolidated balance sheet information we have to see this land. See this land now, holding company land plus subsidiary company land, total land is 4,26,000. And plant and machinery. Plant and machinery holding company given in the balance sheet 1,40,000. Subsidiary company after revaluation plant changes to 1,11,300. So total plant is now 2,51,300. Furniture. Furniture holding company is given in the balance sheet. Subsidiary company is also given in the balance sheet. No adjustment. Directly combined amount 4,16,000. This is about furniture. Stock holding company you have to take from the balance sheet. Subsidiary company you have to take from the balance sheet, and you have to deduct unrealized profit. Working note number 12. Working note number 12 you have to deduct. Yes, that is 1,84,600. That is stock value. Debtor, total debtor we got, that is intercompany dealing working note. Intercompany dealing working note we got total debtor, and there we have deducted 24,000. So total debtor, you can see the working note intercompany. There we have written 2,68,400 final answer for debtor. So that you have to write directly, or you have to do the calculation like this. In the bracket you can show the calculation for debtor. No other item in the asset side. All the asset side items are over. Now liability side items, if you see, once again we have to see the question, because from the question we can get various information. See this now, the balance sheet liability side, if you see, preference share capital of only holding, so that you have to write, because subsidiary company anyway is not there. So holding company, take this information, write as it is. Equity share, again holding company only, you have to take 5 lakh. What about subsidiary company share capital? It is already adjusted, so it doesn't come in the consolidated balance sheet. General reserve of holding, yes, you have to take. Then profit and loss account of holding you have to take, but subsidiary company general reserve and profit and loss account, you have to see majority interest working note. Don't take this information for subsidiary company. Bills payable is not there, but for holding company it is not there, but for subsidiary company it is given 24,150. Since there is no other adjustment for bills payable and bills receivable, directly this information again it comes in consolidated balance sheet. Bills payable 24,150 as it is. Creditor you have to combine, and then there is what, intercompany. Intercompany transaction you have to deduct from creditor. So now once again we'll see the consolidated balance sheet once again. Liability side. See this, liability side of the consolidated balance sheet, preference share capital of holding company, directly from the balance sheet we have taken the amount 1 lakh. Equity share capital, shares of 100 each, directly from the balance sheet. Holding company, especially holding company only. Holding company only 5 lakh we have taken. General reserve holding company we have taken 3 lakh 40,000. But subsidiary company we have to see majority interest working note. Majority interest working note we have to see here. See this majority interest revenue reserve. Where we have written revenue reserve majority interest 2,400. This answer we have to take. Point number 4. Post acquisition reserve, that we have to write under subsidiary company column. See this we have taken. So now total general reserve is 3,42,400. Next thing comes is profit and loss account. Profit and loss account of holding company is 3,48,000 from the balance sheet. For subsidiary company, For subsidiary company, what we have to do? You have to see majority interest. Majority interest working note we have to see. That is 36,400 revenue profit. Revenue profit or post profit. That we have to take. Lesser unrealized profit 2,000. As usual, you have to deduct from profit and loss account. So final profit and loss account is 3,82,400. Bills payable, holding company not given in the question. Subsidiary company is 2 lakh, that is 24,150 given in the balance sheet. So that answer you have to write directly, no other adjustment. 24,150. Creditor intercompany answer we have calculated. Total creditor minus intercompany 24,000. Final creditor is 1,20,150. Minority interest we have to show, that is working note we have calculated. Total minority interest 56,800. Similarly, last one capital reserve information we have to show, that is again we have calculated net capital reserve 20,400 from the working note. So final balance sheet total is 15,46,300 both the sides. I hope this